U.S. markets have now just ticked ever so slightly into the green, opening virtually flat this morning, and it's following some news from President Trump saying on Monday that he was considering a modification to the 25% tariffs imposed on foreign autos and auto parts, and that's for imports from Mexico, Canada, and other places. He also said that tariffs on pharmaceuticals are in his sights. So to unpack it, we are joined now by David Bahnsen. He is the Chief Investment Officer with the Bahnsen Group. David, we saw tech stocks bounce after the White House made some exemptions from tariffs on tech imports, and we saw a boost for U.S. automakers after President Trump said he might offer the industry some help. So, David, is this the new normal, watching sectors pop on the word of the White House?
Well, they're popping and then unpopping. I mean, the tech gains did not exactly hold yesterday. The NASDAQ at one point was up 2.5%. It ended up closing up just 64 basis points. So you're getting announcements of potential carve-outs and exceptions and waivers, followed by the possibility of that going away at some future date. All that to say, the entire theme in markets right now is uncertainty. There's not a lot of clarity that becomes tradable for investors.
All right, and David, we're kicking off first quarter earnings seasons here. How do companies issue guidance in a tariff environment like this one?
They don't. I mean, some companies are a little less impacted by it than others. Johnson & Johnson announced earnings this morning, and they were able to reiterate guidance for the year, but acknowledge there is some tariff impact they can't price in. And by the way, not just tariff impact, but Forex. Some currency impact is a very real byproduct of the tariff war that ends up affecting particularly multinational companies. So there is a lot of cloudiness around guidance. Some companies have said they're not going to generate any guidance at all this quarter. Others are doing so, but with a footnote. That's what we saw from J&J this morning.
Well, we will have to see if other companies follow suit. And some other news this morning I want to ask you about. On import and export price indexes from March, we saw that prices for U.S. imports actually slid lower after ticking upward in February. What did you see in the report?
Well, ex-fuel, it was up a tiny bit, and then with fuel, it was down a little. So you had a slight difference between core and headline. But it's very important to remember that this index is from March, and so-called Liberation Day was April 2nd. And so a lot of impact of where these tariffs go and the threats of tariffs and price responses in markets. This is sort of 1 month before that. So I think next month is going to be a little bit more substantive. But what you saw this last month was mostly a slight downward tick from the impact of lower fuel imports.
All right, David Bahnsen, thank you so much for your time this morning.
Thank you for having me.